SEI just landed on OKX Global with a 2 million token giveaway, Robinhood, Binance US, OKX Japan, and now OKX Global, and oh yeah, there's now a staked SEI ETF sitting on the DTCC platform. You know, that's the same infrastructure that clears trillions in US securities. So, when a Layer 1 goes from interesting DeFi project to traditional finance plumbing in less than 6 months, you pay attention. Because the chart's showing accumulation, the RSI's climbing out of oversold territory, and Ali Martinez just called a TD Sequential macro buy signal. Translation: the consolidation phase might be ending, and if it breaks 19 cents, we're looking at a potential run to 40 cents. Let's break this down. What's up everyone? Welcome back to the channel. If you're new here, smash that subscribe button and hit the bell so you don't miss the next breakdown. And if this analysis helps you spot the next move before it happens, drop a like. It genuinely helps the algorithm push this content to more traders like you. Alright, let's get into it. So SEI is currently sitting at 16 cents, up about 2% in the last 24 hours. Not exactly fireworks, right? But sometimes the most explosive moves happen when nobody's watching. According to Say Wizard on X, the network added 166,000 new addresses in just 24 hours. That's not retail FOMO, that's infrastructure expansion. Real users, real adoption, and here's where it gets spicy. The Canary Staked SEI ETF just got listed on the DTCC under the ticker SEIZ. For those who don't live in finance jargon land, DTCC is the backbone of US market operations. It's where real assets get cleared and settled. Getting listed there isn't some vanity metric. It means SEI is now plugged into the same infrastructure that handles stocks, bonds, and ETFs. This is the part where crypto stops being a speculative gamble and starts looking like an actual financial product. And if you think institutions aren't paying attention to that, you're not reading the room. But here's the thing. SEI's been stuck in consolidation since mid-2024. The 50-day and 200-day moving averages are still pointing downward. Classic downtrend signals. So on the surface, this looks like a coin that's going nowhere fast. It's been holding 16-cent support like a bouncer at an exclusive club. Nobody's getting past, but nobody's getting in either. And for the impatient trader, this looks boring. Dead. A coin you scroll past on your watch list without a second thought. But zoom out for a second. Consolidation isn't failure. It's compression. It's the market deciding whether this thing's got legs or if it's about to crater. And right now, the pressure's building. Volume stabilizing. The RSI's creeping up from 35 to 41. Not explosive, but consistent. And that's when smart money starts positioning. Not when the rocket's already launched, but when it's still on the launch pad fueling up. According to crypto analyst Ali Martinez, SEI is flashing a TD Sequential macro buy signal, and if you've followed his calls, you know he doesn't throw that term around lightly. The TD Sequential is a trend exhaustion indicator. It spots when a move is overextended and due for reversal. A macro buy signal means the consolidation phase is likely ending and the next leg up is loading. Ali tweeted, SEI expanding to more investors is bullish, especially as it could be nearing the end of its consolidation phase. This looks like the calm before the next leg up. And honestly, I agree. But here's my take. This isn't just about technicals. It's about narrative convergence. You've got exchange expansion, institutional infrastructure, network growth, and a technical setup all aligning at once. That's not coincidence. That's orchestration. And when those things line up, price tends to follow. Let's talk technicals for a second. SEI is holding 17 cents support, which has been rock solid since mid-2024. That's not luck. That's deliberate. Big players don't let a coin bounce off the same level repeatedly unless they're building a position. The chart from TradingView shows the price stabilizing in a tight range. No wild wicks, no panic selling, just steady, boring consolidation. And, honestly, boring is good when you're looking for a breakout entry. Now the 50-day and 200-day moving averages are still sloping down, which means the long-term trend hasn't officially flipped yet, but that's exactly where the opportunity is. By the time moving averages cross and everyone's screaming bull market, you're already late. Right now, we're in the accumulation zone, the part of the cycle where smart money loads up while retail's still skeptical. The RSI climbed from 35 to 41. That's textbook momentum shift. RSI below 30 is oversold. Prime buying territory. When it starts climbing back toward 50, that's your confirmation that sellers are exhausted and buyers are stepping in. We're not at 50 yet, but the trajectory's clear. This isn't a coin getting rejected, it's a coin building steam. Then there's the on-balance volume indicator, which measures buying and selling pressure. OBV's sitting flat around 1.1 billion, which means inflows are starting to balance outflows. In English, accumulation. The big money's not dumping, they're quietly stacking, and when OBV starts climbing while price is still flat, that's the divergence you want to see before a breakout. Here's the trade setup. A daily close above 19 cents would confirm the consolidation's breaking. That's your first signal. From there, the next resistance levels are 22 cents, then 23.4 cents, then 26 cents. If SEI clears those, we're looking at a potential run to 40 cents based on historical price action and Fibonacci extensions. That's a 128% move from current levels. Not bad for a coin that's been boring for months. But let's zoom out to the macro picture for a second. SEI launched on Robinhood, then Binance US, then OKX Japan, and now OKX Global with a 2 million token incentive campaign. That's not random. That's a coordinated rollout. Each listing expands liquidity and accessibility. More exchanges mean more buyers, which means more demand. Basic economics, right? And then there's the DTCC listing. Most people glossed over this, but honestly, it's huge. The DTCC clears $2.5 quadrillion in transactions every year. When a crypto asset gets integrated into that system, it's no longer just a DeFi experiment. It's a regulated, institutionally viable product. Pension funds, ETFs, and family offices can now access SEI through traditional finance channels. That's the bridge between crypto and Wall Street, and once that bridge is built, capital flows both ways. According to Say Wizard, the network added 166,000 addresses in just 24 hours. That's not bots, that's real network activity. More wallets mean more transactions, which means more fees, which means more network value. It's the same metric that fueled Ethereum's rise and Solana's resurgence. Network effects compound exponentially, and SEI is still early in that curve. Now my take, this is a textbook accumulation to breakout setup. You've got technical confirmation, fundamental expansion, and institutional integration all happening simultaneously. The only thing missing is the catalyst, and that could be as simple as Bitcoin breaking 100K and pulling the entire altcoin market with it. SEI is positioned to ride that wave hard. But, let's be real, the 50-day and 200-day MAs are still bearish. If Bitcoin dumps and takes the market down, SEI is going with it. The 17-cent support holds until it doesn't, and if it breaks below that, the next stop's 15 cents or lower. So, this isn't financial advice, it's a roadmap. You still need to manage risk, set stop losses, and position size responsibly. Alright, that's the breakdown. SEI is holding support, flashing accumulation signals, and expanding into institutional infrastructure. If it breaks 19 cents, the next leg up could push it to 40 cents. But until then, it's a waiting game. If you found this helpful, go check out my other videos, and drop a comment. Are you watching SEI, or are you already positioned? I'll catch you in the next one. Quick reminder, this is not financial advice. Crypto is high risk and you can lose everything. Always do your own research, manage your risk, and never invest more than you can afford to lose. Trade safe out there.